Good evening, folks. This is Andy Pedraza with Special Effects Academy. We're on the start of the week session in the Forex trading room for August 30th of 2020. We're going to be going through our regular agenda. And with that, let's get this started with looking at the prior week results. On screen is the long-term account. We've had another bit of a boost on the account as we've been trading the Euro New Zealand. We closed, I think, one or two trades. Not too much to say about that. It was pretty much break even. And we have been getting into the Euro New Zealand heavier and heavier as it continues to move in our favor. We started with 1.5 mini lots. At this point, we're at 6 mini lots. We have 4 trades open, each one at 1.5, and they've been entered about 100 pips different from each other as the Euro New Zealand continues to move quite briskly. We'll take a look at that chart and have a few words towards the end on the approach we've taken on this trade. The intermediate term ledger is flat overall. Lose a few percentage points on closed trades, but we are carrying open profit on the remaining trades. So overall, between the two of them, we came out pretty flat for the week, but the trades that are still open do continue to move. So there is a strong likelihood that they will move further in favor. And the short-term account was also reasonably flat. We only traded once over the week and took a very small profit, so not much change to the actual balance in dollars or percentage. Notes and opportunities for improvement. It was an interesting week overall. Some currencies are starting to move quite strongly, not all of them. Prior breakouts seem to be hitting resistance or testing support, depending on which pair we look at. So they made some very strong moves, but they seem to be either slowing down, trying to get another boost, or there may be a possibility of a retracement. So we have to be very careful in looking how we're going to be proceeding on some of these. On the other hand, there are a lot of pairs that are looking as if breakouts are imminent. They had not broken out significantly before, and they have continued to move strongly. So there is every chance that even if the original pairs that moved the prior weeks stop moving, they may be replaced by other pairs, other currencies. In the United States, we're still going through some very significant social unrest on top of all the other issues plaguing not just the US, but the entire world. So we have economic issues. And in the US, we also have the election cycle heating up. We're only a few months away from our next presidential election, and it looks to be very strongly contested. As a result, oil, silver, and gold do continue to hold gains and in some cases even extend. That some cases is mainly silver has been just going through the roof. And last but not least, our live event is still scheduled for the end of next month through the very beginning of the following. Details are on our website. Looking at our relative strength meter for the past month and the past week, I'll ask you to focus on the two columns to the extreme right. The final one is the monthly. We can see that we have a clear winner, more than 12% gains overall in the last month, coming out of silver. We have a few losers, the euro against the Australian, the USD against the Canadian. Those have, and indeed, the USD CAD continues to move rather strongly down. There's a few other highlights. Pound dollar didn't do too bad. It's moved up a little bit more than 2%. And of course, we have the Aussie dollar at 3.41% for the prior month. Aussie JPY almost at 3%. For the week, we had some pretty strong movements, some of them representing significant fractions of that monthly move. Aussie dollar was almost 3% for the week. Aussie CAD, Aussie JPY as well. Indeed, all the Australian pairs moved quite strongly. New Zealand as well did some nice movements, and the let's see which other ones we can focus on. The pound pairs in general and the Australians were really the key movers. The only one moving a little bit haphazardly was the Euro Aussie, which combined two currencies which were actually moving in counterpoint. So again, we're starting to see some good trending beginning on quite a lot of the currency pairs, so not all of them, and the ones that have been slacking in that sense are starting to pick up. Fundamental announcements for our week. We have an interest rate decision coming out of Australia on tomorrow night, Monday night into Tuesday morning. It's a little bit after midnight, so it is Tuesday by then. We'll be trading that one live, so check your email for the schedule. And of course, we have Jobs Friday with the non-farm payroll coming out of the US, as well as the Canadian employment numbers. So those will be our three live traded events for the week. With that, let's move on to the charts. Starting with oil, we can see that oil continues to hold on to its most recent gains, somewhere between $40 and $45, depending when you look, and it does continue to trend very slowly higher. It struggled to clear those $5, so we're definitely not in a bull market, more of a sideways market right now with a $5 band, but still, it does continue to head up by a fraction to a dollar pretty much every week. Moving on to the currencies, euro dollar is one of the breakout pairs that I mentioned has been taking a rest. So a couple of weeks ago, it made a higher high, breaking resistance, and then it retraced, tested support, and ended the week on Friday testing that resistance yet again. So technically sideways, but it does seem to be a rather small portion of the general bullish movement. So we're waiting to see if it does break that top level of resistance yet again and start giving us those higher highs. Pound dollar, pretty much the same, except it had not hit the topmost level of resistance, but it did take a bit of a sideways slant a couple of weeks back. This week that just ended saw it climbing higher yet again, with most of the movement happening on Friday. USD/JPY, more of a sideways pair, though we can see the downward movement as the yen recovers some strength and the dollar continues to lose ground. This is one of the few dollar pairs that have not moved strongly into dollar weakness in the last month or so. So I am expecting it to catch up at some point once it manages to break support at the 104.5. Friday was the bigger movement for this pair as it just collapsed and went down, crossing several levels of support. It made more of a move on Friday than it had in the entire week. USD Canadian, steadier, much more reliably coming down. We are trading this one on the intermediate term account, and it's moving quite nicely. Again, it's not giving us those bigger moves we just saw on some of the earlier pairs, but it has been steadily going in just one direction, down. Did a bit of a retrace on Friday, not a significant one. It still ended up at a lower low overall, a low not seen since somewhere back in the early days of this year. It's lacking about, I'm going to say about 100 or so, 150 pips to the very bottom of the chart. If it does give us that breakout at the bottom, then this is probably going to end up being a very strong mover. USD Swiss also at a bottommost level of support, which it has struggled to cross for the past couple of months. And it did cross it yet again on Friday. We'll have to see if the trading as the week begins keeps it below that level of support and we go on to a lower low. Aussie dollar breaking out at the top, but only on Friday. So we had a very nicely bullish week. We're trading this one as well in one of the accounts. We finally got that breakout at the top, but it is too soon to tell. This all happened on Friday, right before market close. So we'll have to see how the week kicks off and see if we're going to have a continuation. But this one could also be, and in general, all the dollar pairs are giving us some very strong signals into just a dollar collapse. Kiwi dollar, same thing, finally managed to break that topmost level of resistance, but again, only on Friday. So this is yet another one where we're waiting for a confirmation of that breakout. If it does test support and then keeps going, or if we do have a retracement, in which case we would have to wait for the next opportunity to go long. That covers the dollar pairs. We move on to Aussie CAD, yet another pair that managed to do a very small breakout on Friday. Most of the week's movement again on Friday as well. And yet another one to add to that very long list of pairs to keep watching as the week begins to see if we can trade that breakout. Euro Swiss, very uninteresting. It's living at the top of a rather wide wedge. It did a breakout a couple of weeks ago, which only lasted a day before coming back down into the wedge, and it's been sideways pretty much ever since. Bit of a wide mover. We see those long wicks in both directions on many of the candles, and the distances here aren't big in pips. So even a breakout might not be something I take unless I see a very strong continuation. But again, we'll be watching it and we'll see what we can get from it. Euro pound finally took us out of a long running trade. It took us out at a loss on the intermediate. As I mentioned earlier, we do have open profit to compensate for it. So really didn't hurt us too much. And at this point, I would be waiting to see if we have a break of support that we can trade down, or a bounce, in which case we trade it up. I'm quite happy trading this one because when it does move, it gives some rather quick and large profits. So I don't mind testing the waters a few times before we catch one of the trends. Euro JPY did a higher high very briefly on Friday before collapsing and ending up below support for the end of the week. It has started to go sideways. Still waiting to see if we get a good retracement out of it, which is my inclination. I think this one is bound to go down. I think it's played itself out on the bullish run, but again, we won't be trading it until we see a confirmation of that. When it does happen, however, we're going to have in excess of 1,000 pips to be had there if we have a full trip to the bottom. Euro Canadian broke the trend line of support last week, but did so in a sideways fashion. It's above the support of the Kumo, the Ichimoku cloud right now, as well as another horizontal level of support, which it briefly touched on Thursday before popping back up. So I do want to trade this one, also giving us some very good possibilities towards the downside, but I want to see a confirmation first. Pound JPY, we are actually trading this one. I think we still have an open trade, and it is at profit. Actually, all of our trades are at profit right now, or were as the week ended. So that was pretty much a given. It did hit resistance, popped back down on Friday, but still ended the week nicely up. And if the pound continues moving the way it was, we may have a good opportunity to stay in that trade for at least another 500 pips. Aussie JPY, another breakout at the top. Happened earlier in the week, though. The breakout actually happened on Thursday. Then it continued moving up through Friday, and yet another open trade we have right now. And it does look like it finally rejoined that trend line, and we'll see if it has the strength to just keep going. It did end at the highest point in the visible portion of the chart, so that in itself is significant. And again, have to see if we do get a continuation. I do think the yen is overdue for a correction into yen strength, so this might not have that much more room to go, but we'll see. When you're in a winning trade, you stay in that winning trade until you get a retrace that takes you out. There's no rush to take profit. Euro New Zealand, this was our big winner for the week. It was just an utter collapse after hitting resistance the week before. It went sideways for another 4 days, and then Wednesday into Friday of last week, it completely collapsed, breaking through several levels of support, giving us more than 300, almost 400 pips on the initial trade. And we did start doubling up and then tripling up and quadrupling up. So we now have 4 trades open on this pair, entered as it went down. As I said, the largest one carrying almost 400 pips, and the most recent one, open on Friday, ended the week at 50 pips or so in our favor. And last time I checked, because the market is open, it had retraced to about break even. But again, that's just to be expected. This is a very bouncy pair. We'll have to see if the week has it continuing. If it does retrace a bit further, we're going to get taken out with quite a nice chunk of profit, regardless, as it has been protected via trailing stops. Pound Canadian, very bullish week, but it was coming off a significantly bearish prior week. So it ended up a bit higher than it had been in those 2 weeks I just mentioned, but still not a very significant move. It's inside a wedge, and I would be waiting to see if it breaks out towards the top or towards the bottom. Could go either way. And Pound Swiss is probably the most boring of all the charts and the last one in this deck. We did have it go bullish towards the end of the week, and it went all the way back to prior resistance, but never quite broke out. And the trading range is very small in pips, so it really hasn't moved much in more than a month. That's going to be it for the chart setups we see in progress as the week begins. I removed the word coronavirus from all the little blurs because it's just a no-brainer. Everything is coronavirus right now. I've kept the picture of the virus to the left just as a reminder, but we're going to be focusing on everything else that's going on and just realizing that the coronavirus is there and will probably remain there for the foreseeable future. So on the pound pairs, the only significant news is the Brexit separation deadline. The UK does have to, as per the final agreement that they had, it does have to leave the European Union, which means the custom union, at the end of this year. They were supposed to negotiate some sort of settlement or plan forward, which would allow the UK to continue to interact with the greater Europe in matters of trade, as well as enforcement and some other things. But between the British pension for not getting off their butts and doing anything, plus the coronavirus, there is no treaty signed. There is no agreement even being deliberated right now. It's just not advanced anything since the last time Brexit was in the news. And December is quickly coming up. So if we get to the end of the year without that agreement, then technically they don't have anything in place to continue trading. It's going to be a mess for imports, exports, and a bunch of other stuff. Do I think that's going to be the scenario? Probably not. It'll probably be a last-minute effort to sign some sort of deal. But the stress and volatility that will add to the market, to the British pound in general, and to some degree the euro, are something that we probably successfully. So we will be keeping an eye on that. The U.S. has a lot of factors weighing on it. The economy is pretty much melting down. We've got all the social unrest happening, which is not getting any less. It's just being reported less, but it's actually growing. And of course, we have the election cycle with our elections coming up in just a few months. Australia is a very hard economy to pin down right now. We get alternating views. Some weeks the economy is doing great. The next week it's doing terrible. In general, the Australian dollar has been benefiting. It has been gaining in strength with most of the other currencies, but at the same time, I am seeing the bad news outweighing the good in many of the reports coming out. The interest rate decision tomorrow night is going to be interesting, if only for that. It might give us a bit of guidance as to what the central bank expects. But for now, with Australia, I would, in general, ignore the fundamentals and just focus on whatever the charts are doing that particular day, week, or month. Japan, I've said this quite a lot. I do expect the yen to recover some of its strength. especially given everything that else that's happening out there. But it has been very sluggish. It has moved into strength, don't get me wrong. We're seeing some of the pairs starting to turn around, but not all of them. And it's happening very erratically. With some weeks, it just gives up all the gains from the prior week, and then it reverses itself. It's slowly moving into yen strength, but it's a bumpy ride. Trade it by all means. We've picked up some nice profit out of the yen, but trade it carefully. And the European pairs, I think the Eurozone is better placed economically right now than many of its peers, including the U.S., Japan, even China. It has a better economic outlook simply because they've been so conservative in the past. So they are in a better position to weather the storm. And on top of that, they very quickly, at the beginning of the pandemic crisis, they very quickly announced a new kind of stimulus package, which was had never been tried in Europe before, where they're not going to do some sort of blanket stimulus, but they are looking at it country by country, trying to spend the dollars, I guess, well, the euros in this case, trying to spend the euros where they're most needed, instead of sending out a blanket stimulus to all the countries involved. That seems to have been very well received by the market, and the euro has been strengthening steadily since that announcement came out. So the world seems to agree that the Europeans are handling it financially, not in any other sense, handling it financially a little bit better than anybody else. And that brings us to our words of conclusion for this session. And based on what we've done with the Euro New Zealand, I figured I'd focus on that. There is a bad side to doubling up on trades. In betting, which is what started even before trading, there's something called martingaling. And it was invented centuries ago by gamblers. The premise is that if you bet one unit of whatever, one gold coin, and you lose it, then you should bet 2 gold coins for the following round, because if you win, you're going to come back at break even. You're going to recover the loss from the first bet. So you're back to break even and you can continue gambling. But if you lose those 2 units, then you're going to double again to 4 units. And if you lose those, you're going to double to 8, and so on, with the idea that eventually, statistically, you are going to win a round and you're going to end up, as I said, at break even, neither losing nor winning, and then you can continue betting and trying to come out ahead. This was a way for very naive gamblers thinking they could beat the house or end up at least coming out even. It's a recipe for disaster. A bad run will usually have you doubling up beyond the capacity of your purse to keep pulling out gold coins. So even though statistically it sounds feasible, it doesn't work in real life unless you have infinite money, infinite funds to continue doubling and doubling and doubling. Eventually, you're going to run into a brick wall. I've heard of traders doing this. This is why I bring it up, with easily imaginable results. You lose 100, you bet 200, then you bet 400. Sooner or later, you're going to reach the end of your account. When you're losing is precisely when you should never, ever double up. When you're winning, however, and let's move on to the next chart where I added an example of what we did last week with the Euro New Zealand. So I did exactly what I just said we shouldn't do, but the difference is that I was winning. I allowed this first trade to put us about 150 pips into profit before I then opened a second similar trade. In essence, I doubled up. So now I am trading 2 trades, and one of them was 150 profit, the other one was at 0. As this one continued to move, when it gave me 100 pips of profit, I opened yet a third. And when that third gave me 100 pips of profit, I opened a fourth. And I'll continue doing that as long as this thing continues making its way down. Every 100 pips, I'll be adding a trade to the mix, and we'll see how far it goes. At some point, you know what's going to happen. It's going to turn around, which means that the most recent trade, whichever one it happens to be at that time, is going to take us out with a loss. But all the other trades are going to take us out at different points of profit, with the greater profit always being the original trade, second greatest the second, and so on. No matter if we end up having 20 of these trades, it will only be the final one that gives us a very small loss, and all the others end up at profit. That's the way you'll multiply your profits. You make more money, but you only do this when that first trade is a winner. If you're in a loser, you don't want to double up. You want to get out of the trade and go do something else. So take advantage of this system when you're winning. Never use it when you're losing. And that's going to be it for me this week. Any comments or questions from anybody? Okay, thank you very much. I hope everybody has a rest of a great weekend, and we'll be back tomorrow. Regular schedule. I think we're going to do our regular trading at 8 p.m. and we'll do an extra session for the Australian interest rate decision out of the Reserve Bank of Australia. But again, check your emails. That will be the final word on what we're going to be doing tomorrow. Thank you very much. Have a, as I said, a rest of a great weekend, and talk to you guys soon.